Good morning, traders. It's 8:04 a.m. Chicago time, 9:04 Eastern U.S. time. Thanks for joining me again for another Trader Bite. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The market currently is hitting the U.S. dollar index. We're seeing treasuries rallying. We're seeing gold is strong. Gold is up $12 at $1,279.60, or up 0.86%. The DAX is very strong this morning. It's the leader on the list of futures that I monitor. The DAX is up 131 points, or 1.03%. Crude oil got hit a little bit yesterday or in the overnight session as a result of a report showing that there's actually a build in crude oil inventories. Um, Also, the IEA monthly report came out at 3 a.m. Central, 4 a.m. Eastern, shows that crude demand rising to 33.6 million barrels per day in Q4, um, but that the desired levels that OPEC set in the May 30th meeting are not being achieved. In other words, there will not the supply is not being reduced enough to justify the prices on crude. So we gapped out on crude and we're starting to move back up. Crude finished with a weak high. Crude looked like it was very, very likely to continue higher in the overnight session. The main news coming out that's worth noting is, of course, we get the FOMC announcement today. Um, that's at 2 Eastern, and the expectation about a 95% bet that rates will rise. The expectation today is that we're likely to go to 1% on the lower bound and 1.25% on the higher bound, so an upgrade of 25 basis points. We also get business inventories at 10 a.m. today, but the main news is the Fed, a 94.8% probability priced in that we would get a rate hike. Also, there's a lot of pressure on Prime Minister May to cancel Brexit, and politicians in her party are urging for a conversation that is directed towards a soft Brexit as opposed to what was planned before, which is to just cut off ties. Um, and that's really it. This morning we got U.S. May advanced retail sales slightly worse, came in at negative 0.3% versus 0%. Retail sales ex autos came in at negative 0.3 versus 0.1, so both numbers missed. We also got the CPI, and we had a reaction in the market from that. We went from 24.38 and a quarter to 24.43 and a quarter, basically the same move, about the same move we had in non-farm payrolls on the CPI. CPI came in weak. It was expected at 0.0%, but it came out at negative 0.1%. That is the second negative reading in the last 3 months. CPI ex food and energy. Remember, CPI is what drives some of the Fed policy, one of the mandates of the Fed. CPI ex food and energy month on month came in at 0.1% versus 0.2. So a miss on both sides there. And that's how things are shaping up. As far as what we're expecting going into today's session, at 10 a.m. we get business inventories for April. The expectation is for negative 0.2%, negative 0.2% for business expectations. Again, at 10 o'clock, 10:30, we get crude oil inventories from the DOE. Of course, you want to pay attention to this if you're trading crude. The expectation is a draw of 2.25 million today on crude oil inventories. Distillate inventories expecting a surplus of 500,000, and gasoline expecting a draw of 1.15 million. As far as speakers for today's session, um, where the key speaker, of course, is Fed's Yellen at 2:30 Eastern. the news conference regarding the FOMC decision that comes out at 2 o'clock. Their meeting starts at 9, which was 9 minutes ago. So they're the FOMC is meeting currently, and they finish around 2 o'clock, and then the announcement is made. Other than that, we have ECB Speaker Rimcevics in London at 1:30 for those who are trading the euro or euro-based products. Okay, so that's how things are shaping up. Um, let's look at what we expected yesterday versus what we got. The primary expectation yesterday was for the market to have an open auction out of range, make an attempt to close the gap, and then the main rotation is expected to be up. Wasn't expecting the market to make much of a move. I was looking for to move into the next key distribution, which was what at 24.35 to 24.36, right in here, this distribution here, and then end up closing somewhere in the area that it was at, which was 24.32. So mainly a bullish view yesterday. The secondary hypothesis was looking for a push higher on the open, looking for the market to push again to 24.36, 24.37, put in a weaker attempt at the high, and then start to attempt to close the gap zone, and then eventually test into the prior day's range, expected 9 to 10 points. 9 to 10 points of range. Here's what actually happened. We had a bit of a hybrid session yesterday. So we get this open auction. We get the push up to 36 right on the dot. Consolidation into the opening swing under the mid. There's this to me looked like a prime opportunity to get short imbalance and to look for the market to fall. It took a long time though. You had to sit in that trade for about an hour while it moved back and forth in about a 2 point range, and then it finally relieved itself. So it started to work here down into the prior day's range. Remember the gap zone is right here from the open to the prior high. This is your gap zone. And remember, hypo 1 was expected to be sideways, test into the gap zone, and then not close it, and then continue higher. And the goal on the high side was 24.36. Hypo 2 was to open an open auction, get a quick burst up, and then pull back, have uh, a failed attempt at taking out that 24.36 and now close the gap. So at this point right here, I'm looking for, or actually at this point right here, I'm looking for hypo 2. I'm stalking for hypo 2. So the short set up, the short was pretty good. Did not really give anything for a long time, and then ultimately I'd given up on it, but ultimately it ended up pushing to 24.2875. Now notice that the 24.2875 did not actually close. It got into the MC point of control, the 24.30 and a quarter that's outlined here. Okay, I'll show you that in a bigger picture in a minute. It got into that, tested the other side, and then once it started to push through right there, hypo 2 is no longer valid, and now we're looking for it to continue higher. So we had yesterday is a neutral day. We closed on the extreme. We did not manage to move the point of control up. So it didn't have it's got a balanced profile, but the key elements to take away yesterday is we tested down, we failed to continue lower, we start to form these beautiful zippers. Look at these things, just excellent support underneath, and then we finally break higher into the IB high, which gives us a neutral day. Neutral day is defined as a market that breaches the first hour's low, which is known as the initial balance. These yellow lines are the first hour's low and high. It's a neutral days when it breaches one side and then breaches the other. The second side that gets breached is the stronger side. So Um, the goal here with a neutral day is that we're likely to see continuation in the direction of the latest breach, especially on a neutral extreme. Why is this called a neutral extreme? It's called a neutral extreme because the market held into the close, held the upper distribution of the neutral day. It stayed above the initial balance as opposed to falling back in, which is what it tends to do on a neutral day. So with this weak high that we see here, with a lot of volume, with a double distribution profile, the low volume node of this double distribution profile is right there at 24.3550. It's a key price this morning. We expect this to continue higher in the overnight session. What this market is saying is we're looking higher. And that's what we continue to do. So this is this that we leave behind a little gap zone, a tiny little gap zone here. It found its buyers ahead of the prior day's range. This is very bullish behavior. This is stuff that you need to look out for. At least I look out for it when the market unsuccessfully closes a gap zone. It's a very important indication that it's not that it was able to find the buyers um, early, and it's not able to even get into the prior auction. This is the most recent auction right down here, the prior day. The normal habit is for the market to test value high, and if it cannot find buyers, it's likely to test the point of control. If it cannot find buyers, it's likely to test value low. Um, and if it cannot find buyers at this point, we have a great day to the short side because now it's going to give up the range. It's likely to give up the range, but generally we test the prior auction to confirm and then start moving up. If we're not able to even do that, this is a very bullish sign. You want to be on the long side of that. So that's how yesterday played out. We had basically hypo 2 until it breached the mid and set up a good support zones underneath, and then we basically ended up with hypo 1 back on the table. So here's our profile that we're carrying forward. This is our balance zone. You can see that black line. This black line here is the point of control, and it's 24.30 and a quarter. That's the price that we basically checked yesterday by a point and a half or so. We pushed through by about a point and a half or so, and bounced back up. It wasn't able to get through that lowered the point of control. So here, as we shift forward, given yesterday's action, what we've done is we've got a very clear double distribution right here on the MC point of control. This double distribution price is lower. It's at 32 now, and we're starting to build we're starting to now shift volume up. You can see the point of control there, the point of control shifting up on the profile, market accepting higher prices and working on the upper side of this profile. So 24.4350 is the all-time high. 24.43 and a quarter is the overnight high. We missed the all-time high by one tick overnight. Now remember, I talked on Monday about the fact that, and yesterday about the fact that we had a pretty swift rejection of the low here. We had what's called an unfair or an excess low or an unfair low, and the market started to spring up on that day on Friday, and I warned that this is likely to start climbing through the profile and to push to new highs on Monday and yesterday. So this is where we are. The point is not to tell you, hey, look at me, I'm right. That's not the point. We don't make money by being right. We make money by aligning ourselves with the market. Remember that. Okay, it's very important to know that you don't make money by being right. The market is the wrong theater to debate prices. You don't want to debate prices with the market. You're not going to win. The market is a theater where you just surf the waves. You're identifying to the best of your ability. Your goal is to identify the best waves based on what's likely to happen next, where the next wave is likely to go, and your goal is to find a spot to get on and ride that wave until it runs out. of steam until the pressure on it is relieved. That's our goal. So our goal is to constantly look to align ourselves with the market. Do not try to argue with the market. I see a lot of people doing that. So here we are, back to all-time highs, and we're likely to squeeze higher. We have the FOMC today. We're going into the FOMC today, so my expectation is that we're likely to take it out. The market's already priced in the fact that they're likely to raise rates. The thing that would impact that is if they raise rates faster, which the CPI numbers don't show that. This is part of the reason, in my opinion, for this strong buy on the missed CPI. Remember, CPI came in at negative zero point 0.1 versus 0. So it practically, in my opinion, eliminates the chance that the Fed would increase more than 25 basis points. So if the Fed doesn't increase today based on CPI or based on dissent within the committee, um, then that's a positive. If it increases 25 basis points, it's already priced in. It's a positive. The market's expecting that. There's no risk. There's not no need for a risk premium there. It's already priced in. It's fine. Okay. But the only circumstance where the market's likely to push lower is if they increase by, say, 50 basis points. And that would be a surprise to the market. But the probabilities of that, given today's numbers, are diminished. So I expect that we will likely continue to grind up and push this high into the FOMC today. Okay, that's the conclusion of all that. The overnight session shows that we took a small test lower to the right here. The overnight low is right against that LVN right here. This double distribution has the key LVN. I love double distributions. They're very, very clear. It's a very clear consensus on two different areas of price with a clear cutoff line. So you know once we get through the LVN, you know where the target is next. The target is the highest volume price in the next distribution, right? So the double distribution profile like yesterday is a coveted thing. I like to see those. Um, so the market pushes down into that LVN, puts in an overnight low, and then starts to drift up, and we continue to drift up. We're above mid, we're above VWAP, we're above, we're at the point of control. The distribution overnight is fairly even. The volume is 160,000, but of course we're still rolling until Friday. Note that the delta is down, but again, delta is not quite reliable during this week, but as price is up and delta is down, so there are sellers as this thing continues higher into the highs. There are sellers in here. Remember to hedge your option position. A lot of times, if you've sold calls at say 24.45 and you want to protect those, you're going to have to sell futures to protect part of that position. Um, so that's where we are. As far as what we're looking for, this morning we're just slightly out of value, out of the prior day's range. Again, same stuff. Open, a small test of the prior day's range. We have a fairly weak high from yesterday, a fairly blunt high, expecting support there, and then I'm expecting the market to slowly push this high until the Fed announcement. The Fed announcement's expected to bring in a little more volatility, but I'm really not expecting a run at all. Not expecting a run on the Fed announcement. I'm not expecting it to sell off either. I'm expecting it to just be a non-event. So overall, I'm looking for areas to lean against long on the open as part of the primary hypothesis, but it doesn't mean that I'm going to get long on the open. Uh, I'm not looking to get long right off the open. The goal is to um, the goal is to look for the market failing to push lower and wait for something to lean against and then look for the rise. Look for a consolidation to lean against, and then look for it to rise. I apologize. I think I said sell futures to cover calls. It's you you buy futures to cover calls. You have to deliver that future when the call expires or gets exercised. I said that upside down. Didn't intend to. So anyway, so this is primary hypothesis. The secondary hypothesis, just like yesterday, is the impulsive or the initiative one. The market starts to move higher, tests down, and then holds steady into the FOMC announcement. So expect the market to be wishy-washy today, choppy, and fairly quiet into the FOMC announcement, and then from there we get the move. Again, the move is expected to be higher. I just don't see a market, the incentive for the market to be a seller, the OTF to be a seller up here. We'll see how that works. Good luck today, and I'll catch you tomorrow. Take care.